Good afternoon and welcome everyone to the Uncensored live Q&A session, our trading talk for today. So let's begin with a quick introduction to the webinar, how it's going to happen, what we're going to do in every step. So to open the webinar, we will go through the previous questions that our team has prepared, which is this part. And then we have the dynamic questions, which are questions that can come from the audience, which I will paste down here. And then we have the slide with the information and the links, which is this one, which I'll just send you some links to save you the trouble to find it by yourself on the website. And lastly, we have the analysis slide, which can help us explain a little bit the approach, different approaches between technical analysis and fundamental analysis. It's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, a very common question is if there is a possibility to watch the webinar again to get a recording of the webinar. And as I always say, it's not only this webinar. You can get all the recording of all the webinars just by going to our YouTube channel. So going to YouTube and then search AvaTrade. This way you can find our channel and you can find the recording of this webinar and the recording of other webinars as well. Analysis, risk money management, beginners webinar, all kind of things there, huge library content, and you can enjoy that. So the first question is, how can support and resistance can help find an entry point? So how can support and resistance help to find, right? Define. All right, an entry point. Okay, let's also paste that down right here, and then we'll open our web trader to see how we can better answer this question. How can support and resistance help to find entry point? First of all, what is support and resistance and what is an entry point? Entry point is a point when we choose to open a trade. Okay, let's get something to work with, maybe from the lists here, and maybe one of the commodities, and also down the agriculture, maybe corn. Okay, and if we are looking at corn at the moment, we see that this is a pretty strong resistance that we've passed. We can see that we passed, well, it's exactly where we are at right now. It's exactly, you guys can see here. Let's maybe put an oval here so we can remember the focus of this point. Okay, and this is also something that we can maybe include. And then we have the support line, which is this. Okay, and then the lower one as well. So as you can see, there are many. This point 475 is a point that corn was around a while. Okay, so in here it exceeded that point. We can, if we enable the crosshair, we can see that the high of that day is 468. Okay, at the moment we're higher, which means that we currently we're breaking the resistance. Okay, I'll speak about what the meaning of this in a moment. Resistance will be the higher points, okay, above the price. So obviously this is now below the price, but it used to be above the price, and now it broke the first resistance. As we can see, there are other levels in here. This is another one. This is another one. This is another one, right? There are many levels, but we're not bothered by them now because they're still pretty far away. but we will mark them on the chart as well. Okay, just to know that they are there, but we can see, okay, so this used to be the resistance. At the moment it's not anymore. This is the next line, 495. Okay, and then let's be precise about that. The high here, 493. Okay, 493, no problem. Okay, so this is the next line. We'll paint it in white, and then underneath we have the support levels, support level, another support level, and we'll paint them in white as well. Okay, and then we have nice levels for support, nice levels for resistance. And now we can try and understand how this can help us find how can this help us find an entry point. Now, if we're looking at the general trend, okay, we can see that the general trend here is bullish. Bullish meaning that it's up-going trend. We can see that the long term, we're looking at weeks. It's important to understand those are weeks. If I'll switch to days, we can see that for the long term, this is quite impressive. Continue to see that we're looking at. This has been a good half a year, right? Since, let's look at the date together. Since October, it's not half a year, it's more like 3 months, give or take, right? I'd say that. And this is quite bullish. Now, as we can see, because we broke the resistance, we're breaking the resistance. There is a reason to believe that corn can proceed going up unless something fundamental will change that, right? If something will change with the US economy or corn, then we can assume that corn will have an ore transportation or anything like that. So we can assume that the direction will change. Okay, unless something fundamental will change, we can also assume that it will carry on up. How much up? As we can see, the next resistance, 493, is something that we can put on the chart as a point that we can think it will get to it or it will pass that. Meaning, this is my point where I can target my take profit. Just as an example, I can do it a little lower than that. There is a reason for that. Okay, let's look together at the time that corn reached that point. You see that candle here, let's maybe use a rectangle instead. Okay, that candle on the 4th reached that level, but it didn't go through that level. It reached that level, but it bounced back, right? Meaning it couldn't break that level, meaning that this level here is, as you can see, it's a reversed hammer. So if I will target this specific level with my take profit, what can happen is, similarly, it's not going to go to its full extent, 493, but it might turn around before that, which means that I can potentially miss. My take profit might not be triggered, okay? So if I'll mark the take profit instead of 493, I'll make it maybe for maybe 85, you see? Then this way, as an example, I'll feel more secured, okay? Because this is half a way to target 493. So there are many ways. There are many ways to use support and resistance. Oh, this is to close the position. But for the entry, if I'm looking at those levels, of course, because we just passed, and we can see, you see, there are also in here there is retracement. Okay, I want you guys to understand something very simple. When we see a candle that looks like this, the thin segment here is a price that the candle was at, right? You see that the high is 475, where we marked. 475 is where we are at, but it closed 468, right? So as you can see now, it's also going down a bit. So what I can do instead of buying now, again, this is in a buy scenario. All of this, everything, all the calculation we did here is for a buy scenario. In a buy scenario, our intention is that the value will increase. This is why I have placed 493 or 485 as an example to target, because the value can increase, okay? Now, regarding an entry, one of the things, okay, first of all, let's also just say a few words about that candle as well. We can see that the momentum in this candle and the momentum that we're having this week is different, okay, even though the week is not over yet. It can still move, but at the moment, as we can see, it doesn't seem like, let me switch today so you guys can better see what's going on. You see, it hasn't proceed going up. It hasn't proceed going up. We have here bullish, bearish, and bearish, bullish, and bearish again. So it can proceed going bearish. Now, if I would like to optimize my entry, and instead of buying now with uncertainty, what I can do is I can target a little lower level, just like this, and I can say instead of buying now, I can buy in the lower level, which was the beginning of the retracement. And then if it will turn around back from this point, let's go back 2 days, then it will be the differ from the structure we're seeing here, which are these levels. Okay, 473 to 479. So I can say, let me get the lower price and let me buy it a little lower than where it's at right now, hoping to gain the momentum from this candle. Okay, because I understand that if I'll buy now, it can flinch down a little more. It can go down maybe $2 before it will proceed going up. It will turn back up. Okay, so I'm hoping for reversal and then the buy. So I can set execute when price hits, and again, instead of 475, I can go for 472 or 473, or maybe even, let's see how 470 looks like. Yeah, that seems even better. You see, 470 is the beginning of the week. If it gone back and then it turns around, that means that for me, it could be a sign that it finished the consolidation. Okay, because of the days we saw here, as you can see, which was ranging through those levels. Okay, I don't want to put too much into analysis, as this is not, it doesn't need to be too advanced webinar, but I guess you guys understand the point of what I'm doing and why I've explained that. So instead of buying now, we can target 470 and our 485. Just a second. We said this is the resistance. This is midway. Yeah, we can keep it like this. We can keep it like this. Maybe also paint it in green, and then target 485. Okay. Let's also. It doesn't really make a difference for our example now, but yeah. So basically, the steps that we took is, first of all, we changed the time frames and we identify different levels on the chart of support and resistance. We marked them with an oval, and then we've placed the lines, as you can see, price lines. As in addition, we added some timelines to the different resistance and support to have measurement with statistics. How frequent can it go there? And to match it with the times we're having now. Okay, this is really not the point of this question, but still it can be helpful. And once we saw that if we think that this is in a buy scenario, once we saw that the resistance is 493, the next resistance, we took half of that as precautious, and instead of targeting 493, we targeted 485. The reason is, as we can see, this was the beginning of the retracement when it broke the resistance, when it was higher than the resistance that it broke now, right? We see 487, 487, it just passed that, and then the next level is here. All right, so let's also write here the answer. Support and resistance can help find entry point by comparing the levels of the last, that depends on the scenario, of the last highs or lows. Okay, in other words, as we saw, if we're comparing the levels that we have here, we can see that this is approximately the same, the close here is the same as the open in here, and then we can target it as entry for potential reversal. So I'm also going to add here. Okay, there's no need to add potential reversal here because that depends on the scenario. As I've explained, if we are with a buy, of course, if we wanted to get in a lower price, so we are looking for a down and then to buy. If we were looking for a sell, so this also could be potential reversal, but I might even want it to go lower before I'm selling. So it's not always about reversal and then entry. It could be with the trend, it could be against the trend, but it very depends on the scenario that you are looking for, if it's a buy or a sell. Yeah. All right. Now let's take the answer we have here. Okay, so how can support? Let's delete that. Support and resistance can help find entry point. Comparing the levels, the high of the lows of previous support and resistance levels, depending on a buy or a sell scenario. Right, as we understood, buy scenario means value we want it to increase, sell means we want the value to decrease. Let's also minimize that to make it a little more comfortable for our eyes. We'll have the second question: what is the most important element in a strategy? Okay, what's the most important element in a strategy? So I would probably think the most important element in a strategy is maybe how much money I can make, right? Or maybe so with the low exposure, with low risk, right? So I can maybe think about how much I can make or how much I can lose, or maybe how less consuming it is. Okay, maybe the most important thing is that it will, maybe I can make not such a big amount, but I need very little time, maybe even automatic. That's the most important thing. So what is the most important thing? You can share with me, guys. What do you think that is the most important thing in a strategy? How much you can make, how much you can lose, how much time you spend. What's the most important thing? If I can make more and lose less. Okay, all right. Thank you, Tobias. If I can make more and lose less, that's, you mean the ratio. Ratio, profit and loss ratio, right? This is the most important thing. Okay, maybe, but I think that the most important thing in a strategy is not the number. It's not the how much you can make or how much you can lose. The most important thing is that the strategy will fit to you in terms of your time, in terms of your personality. That means that a strategy can be as good as it can be, but it also needs to match to you, right? And this way, if the strategy matches to you, you can then evolve and shape it in your own to your own needs. Of course, if you still don't have a strategy, what you can do is you can go to we have an app called AvaSocial. Okay, and in that app, what you can do is you can follow or copy another trader. And by following another trader, you can actually get messages with the positions that the trader is taking, and you can maybe do research with it, or you can execute the same way. You can open the position the same way if you want, and then you can copy. And to copy means that your account will automatically trade as the other trader account. And the beauty with AvaSocial is that you can also customize the lot size. You can decide, I don't want to copy the exact same strategy. I want to copy the strategy, but I want to do it with a low lot size. This way you can do research and you can decide if it's for you or not. Okay? But like I said, I think that the numbers are important and the profit and the loss, they are important, very important. But the most important thing is the strategy will fit to your lifestyle and yourself. Okay, and also one more thing that can really help constructing a strategy, finding a good strategy, is contacting your senior account manager. We're assigning here a senior account manager that can assist you make a tailor suit strategy with no additional charge, and just use that. Use that because why not? Okay. So you've got AvaSocial to do following and copying and research. You have a senior account manager that can assist you with constructing a plan and all of that, and everything's related to trading as well. And that's what I think. So I'm gonna write down here. Of course, this is my personal opinion, and somebody can say, listen, the money is the most important. I don't care about the time. I don't care about anything else. Okay, so the most important, one of the most maybe in a strategy is that it will be suitable for me to perform. Okay, because as sophisticated as it will be and as profitable as it will be, if it's not in my level, okay, if it's too difficult, if it's too demanding or whatever, I'm just not going to be able to do it for long term. And then what's the point, right? Because any strategy that I'll pick will require me to practice anyway. All right, next question that we have is, what are the pros and the cons trading more than one instrument? So of course, the pros are that, for instance, if I'm trading corn and at the same time I trade, let's see, oil is an example, and I have a position with corn and I have a position with oil. One position can make profits, the other one can maybe also make profits. Another scenario, one make profits, the other way lose. Another scenario, both of them lose. Now, what is the advantage using two instruments? With two instruments, we have more scenarios. We don't make less or lose less. We have more scenarios, meaning if I only trade corn and I have one position with corn, either I make profits or I make loss. With corn and with oil, I do what we call diversify. And that means that I have more scenarios and I can either profit or loss. I can profit from oil or corn and then lose from the other, or I can profit from both, or I can lose from both. Okay? What I can do if I choose to diverse, Okay, the question here is about pros and cons, but still I'd like to make this little explanation so you maybe I'll include it as part of the cons. Okay, the pros is we have more scenarios to make profit or loss. Okay, again, don't be confused. If I'm trading more instrument, it doesn't mean that I can make more money, because I can just maybe take more a bigger position with one instrument, right? But then I can also lose a bigger amount. But when I diverse, when I use two instruments, when I use two, as an example, corn and oil, I can then split my target and split my margin, and then also split my risk. And this way, if for instance, I design the position here with corn to, let's use the numbers we have here, maybe make it like this, and also change the lot size. And then let's suppose that I target 250 with corn. Okay, and we'll do the same here as well. Okay. Oh, sorry. Current price. Why is it not showing us corn? Oh, I'm looking at the wrong graph. 70, that means we are with a buy. Yes, and our, oh, 475, and we'll take 10 from here as well. Great. Now, as we can see, if we're using corn as an example, and we targeted 250 and 250, never mind that this is a ratio of 1-to-1. It's not the point of what I'm explaining. What I can do is I can say, let me use corn to do the same as well, and then I have two instruments with two ways to either make 250 or lose 250. And then what I can do is I can balance, and I can choose which one to close and when. And like I said, I have more scenarios, which gives me better ability to maneuver with my account. If I'm just relying on one instrument, just like this, then either I make profit or I make loss. Okay, that's it. Of course, the cons using multiple instruments is that it requires more time. Requires more time because we must think of more instruments, what margin we're using, what is again if we have one instrument, so we have 250 and 250, but if we have maybe four, then it becomes 1,000, right? With the same ratio, 250 times 4, it's 1,000. So when we diverse, we need to do additional calculations in order to manage diversification, right? If it's just one instrument, so of course it's just like that, and we don't have to accumulate any other numbers. This is what we have. We can go and review that in our positions. If we have multiple positions, I also need to pay attention not to trade too many instruments. Maybe if I have 50 different positions with 50 different instruments, maybe it's something that will be challenging for me to manage, right? So I need to know how much available time I have, how many positions I have, and of course, this way I can make comparison and better manage my margin. And as I spoke about this many times in the past, managing the margin and ensuring that it doesn't go below a certain level is highly recommended. The reason is when we don't have enough margin to hold a position, a losing position, then the platform will close our position. Okay, beginning from the biggest. In other words, There are pros, which gives us more scenario, more ability to make profits or loss. Of course, if we manage it correctly with a certain ratio, then we can design a strategy that will help us moving forward, even if we lose, as long as we make more than we lose. And there are many ways to diversify. However, if we add more and more positions, more and more instruments, we also need to think about the necessary margin and how to embed that in our strategy without to exaggerate. Yeah, let's maybe paste that down here. Again, this conclusion that with diversification you can make more money, yeah, of course, but it works the other way around. Okay, so we get more scenarios. We don't get more profits or more loss. We split the risks. What is the difference between trading using a phone or a computer? So using a phone, it's a small device, even though there are today, there are phones as big as a computer, right? But still, using a phone is naturally, just a second, guys. Using a phone is naturally using a smaller device. And of course, the ability you've got on using a phone to maneuver on the chart, to analyze the candles, to place the lines, to place indicators, all of that with the phone. Again, to my personal opinion, some people may tell me, Danny, I have an incredible tablet or whatever it's called, and I'm seeing it 4K. Yeah, all right, sure, no problem. But again, I'm talking about the average, the average human being, right? Who has maybe a regular computer, a regular laptop, and you know what? Even a professional trader, we used to have this nice facility with 4 or 5 screens, and to see everything, every chart gets a screen, and it's very, very comfortable. But I'm not talking about those trading stations. I'm talking about just a regular, a computer and a phone. This kind of comparison. So with a regular phone, an iPhone or whatever you want to call it, and the regular computer, laptop or whatever you want to call it, okay, naturally with a computer I think it's more comfortable, and the reason is you can customize the chart, you can move and just make it the way that it just allows you to see everything the way that you want. With a phone I think it's very different, okay, and it's really, I think, rare that to see multiple charts. Again, I have to use multiple charts. I don't know what about you guys, but if I'm just analyzing one chart, it's that's not how I do it. So I think with a phone that will be very challenging, very, very challenging, and it's rare for me to see, So with a phone, it's great. It's on the go. You can trade wherever you want and all of that, but we can't compare it with a computer. We can compare it with a computer. What I like to do sometimes is I do the preparations and the analysis on the computer, and then if I've got no time and I really want waiting for something to happen and then to take the trade, sometimes I use a pending order or my phone. Okay, but naturally, if I have a situation to choose whether I trade on the phone or on the computer, 99.99% of the cases, I'll take the computer. I'll take the computer, I'll do it properly. I'll have maybe some tea or something by my side to help me get into the focus to the charts. And that's, I think, the best way to do it. Of course, some people are doing it while juggling on a train or whenever you want to take it to the extreme. Okay, but again, my own personal reference, I say have a chair, have a table, have a computer, and do it properly. But if you've got no choice and the only choice you've got is to use the phone, of course, it's not that bad. Especially today, everything is smart, smart devices. So like we said, you get this explosive screen, and it's fast and sharp and whatever. So everybody can use whatever they want. But as a conclusion and the answer to this question, I think that something stationary. So I would say, if I have a choice to make between trading on a computer, and this is again if I have both options, not if I'm limited to either this or that. If I can choose, if I can choose to trade, if I can choose to either trade a computer or phone, I would trade on the computer. And as I have explained, the logic behind this is that I can have set multiple charts and I can do it properly with the analysis and with the tools and with the indicators and everything that I need to get to optimization of my trades. And also analysis in terms of reading news and articles and economic calendar. Think about looking at something like that in your phone, right? Just a second. Okay, so if you're looking at something like that on the phone, you have to agree with me that it looks a bit different, right? It's still amazing, it's still accessible, but at the end of the day, I would take the computer. Now let's proceed. I think that we've concluded the answer to all the questions we've got today. Let's just quickly make that a bit smaller to fit to the presentation and to our eyes. Okay, and let's carry on to the third slide. We'll have what we have here. I'm just going to paste it in the chat for you guys. I hope that you can see that. This link takes us to the education section, but I'm also going to show you how to get there from the website. Okay, this link here is to help you make a deposit if you're still training on a demo and you want to get down to business. The link here will direct you to make a deposit. This is for the FEC in the Help Center. Basically, if you have any formal questions or anything official that you would like to get assistance with your account, this is how you can get it with the Help Center, with common questions that can be found here as well. And in here, again, for real account, if you're still training on a demo and you want a real account, so this is how you can make it. And the Academy is also something that I can show you from the website. So for your convenience, what we're going to do is we're going to go back to the to here. Okay, and we can see that it doesn't matter where I am on the web trader. If I click here on the web trader icon, it's on the AvaTrade icon, it's going to take me back to the default screen. And in this default screen, let's get rid of the indicator real quick. And in this default screen, what I wanted to show you is the Academy, which you can access on the website. Now, the links that I've sent you are useful for also people who are not using this interface. And how can you do it? You see that there are left-hand side, we have some icons here. If you pass that segment all the way down, here we have the chat, and above that we have the Academy. Right, so again, I'm here in the default screen. I logged into the website, and when I am here almost all the way to the bottom, we have tutorials in Academy, and if I'll click on Academy, I will go to the Academy. And if I'll click on tutorials, it will open me this nice window here with all kinds of different topics, which from there I can choose what I want. And if I want to, let's suppose I want to learn about leverage and margin, I click here and I click here on the play, and right away we can see that the video start playing and I can educate myself with a nice new topic to learn. And there are many other things here as well. A lot of content. Yeah, and before we say goodbye for today, as I've explained in the beginning of the webinar, to enjoy the recording of this webinar, all you have to do is just to go to our YouTube channel, and in our YouTube channel to search for AvaTrade. You need to go to YouTube and of course to search for our channel, which there you can find the recording for this webinar and for other webinars as well. Now, before we say goodbye, I would like to paste you guys here the special promotion code. So I'm just going to take it from here and paste it in the chat. The benefit that you're getting here today by joining to the Q&A webinar is actually a one-on-one premium market review with your senior account manager. That means that you get the opportunity to analyze with a senior account manager the market and to ask whatever inputs you want to assist you with your account and trading strategy. I hope that it was an enjoyable webinar for everyone and that you've learned at least one thing from the webinar today. I would like to welcome you guys to join us next week. Until then, I wish you all a fruitful week. Best of luck with trading and have a good day.